All right. What is up, traders? What's up, Raccoons? Super excited for today's video. We got to take a look at natural gas, okay? Natural gas is dropping, and we're actually doing something that I was trying to warn a lot of people about in the last video that I did on natural gas, going over oil and how we had that gap down to fill. We'll take a look at the charts, but before we do so, we're actually going to dive into some of the big news surrounding natural gas, right? There's been the strike happening in Australia. All right. And actually, investors boost their bullish bets on European natural gas prices. We'll dive into that. Why? We'll go into a bullish count for the natural gas futures. We'll also take a look at a bearish count for the natural gas futures. Okay, that way you guys can, do your own analysis, come up with your own thesis, and, come to a conclusion which scenario, whether it's the bullish or the bearish count you think that we're in right now. I do want to mention, I just dropped a completely free newsletter. This is what the website looks like. There's a link in the description. This is, what one of the articles looks like, kind of just going over some energy stocks. And if you guys are into free trade ideas and free trade setups, along with just good investment intelligence in general, I highly recommend, signing up for that. So that way you guys can get those emails straight to your inbox, multiple times a week. All right. There's a link in the description and also a pinned comment down below. Now, we got to talk about this right here. The Hickman County gas plant explosion, equipment failure named as cause, and one person is hospitalized. So this is more of a little bit localized. This is US. There was an equipment failure at the Tennessee gas pipeline / Kinder Morgan facility, and it caused an explosion, forcing authorities to evacuate anyone in a 1-mile radius. All right. We also have EU hits gas storage target before its November deadline. So prices are likely to remain volatile as the bloc lessens its dependence on Russian energy, analysts warrants. Now, the EU has hit its gas storage target more than 2 months ahead of schedule, but analysts warned that a cold winter could lead to volatile prices and Europe scrambling for energy. Europe has become dependent on buying liquefied natural gas to make up the shortfall since Russia began slashing supplies after its full-scale invasion of Ukraine last year. And Europe's newfound thirst for LNG has made it more vulnerable to global energy shocks. One is currently coming from Australia, where potential strikes at LNG export sites, which collectively account for 10% of global supplies, sent the TTF price surging 40% last week. Now, Australia is a key supplier to Asia, and LNG from the country rarely makes it directly to Europe. But if buyers of Australian gas in Asia need to hunt for alternatives, it will pitch them directly into competition with Europe. Now, this is why investors are boosting their bullish bets on European natural gas prices. Investors haven't been this bullish on Europe's natural gas prices all year. The most recent supply threat raised volatility after a period of several months of calm trade. It is looking as though European storage will essentially be full before the start of the next heating season. And so we would expect to see renewed downward pressure on prices, particularly once there is some clarity around Australia. But you can see here the position of fund managers in European natural gas futures turned into a net long, the difference between bullish and bearish bets for the first time this year and for the first time since October of 2022. And there's 3 natural gas plants right now to stay open through 2026, including Oxnard's. Now, this is pretty important to me because we know, California is very quote unquote green and, pretty against natural gas. But you can see that the extension has been extended again through 2026. A fourth, the Scattergood generating station in Playa del Rey will receive a 5-year extension to fill regional supply gaps through 2029. Now, the decision about fossil fuel plants comes despite the state's mandate for 100% renewable and zero carbon electricity by 2045. The state also agreed to pay the plant's operating companies about $1.2 billion from 2024 through the end of 2026 to stand by during energy events such as heat waves. They say that these resources would only be turned on to address extreme events or for maintenance runs at the direction of the state's grid operator, said Delphine Hu, deputy director of the Department of Water Resources, at a meeting of the California Energy Commission last week. Now, workers begin their strike vote at Chevron's LNG facilities in Australia. So Chevron faces the prospect of work stoppages or even an all-out strike at Australia's second largest LNG plant at Gorgon and at its Wheatstone operations after voting opened on Friday for a union ballot. Australia is one of the largest exporters of LNG to the world, along with Qatar and the United States. And concerns about a strike have spurred volatility in European gas prices over fears the move would fuel competition between Asian and European buyers for cargoes. China and Japan are the top lifters of Australian LNG, followed by South Korea and Taiwan. Now, Australia's labor regulator last week cleared the way for unions to conduct a protected action ballot that gives employees a chance to secretly vote, fueling worries any potential strike could slow the country's LNG exports. Based on industrial rules, the ballot for workers at Gorgon and the Wheatstone downstream facility must close by August 24th at the latest. So that's literally about to happen. Now, a separate ballot for the Wheatstone offshore and platform workers must close by August 28th. So this is important stuff, right? And this is a pretty big deal, and this is all happening right now, right? And depending on the time that you watch this video, this may have already passed and already happened and be affecting. Now, when you take a look at the monthly U.S. ethane production, all right, it reaches a record high in April of 2023. So the ethane production in the United States reached a monthly record of 2.7 million barrels per day in April 2023, continuing the upward trend that it started in 2013. Now, this is the highest rate ever. Increased U.S. production of ethane occurred in conjunction with increased production of natural gas. Ethane, along with other natural gas plant liquids, is recovered at natural gas processing plants as raw natural gas from the well is processed to meet natural gas pipeline specifications. So that's why I'm including this in here, because it is related to natural gas. Now, the EIA, which is the, I believe it's the Energy Information Administration, I definitely, advise you guys to check them out. All right. They give a lot of the best info and a lot of really good, accurate data that you guys can look at. Right here, we have the total supply demand balance. So in blue, you have the total consumption, and this brownish color, you have the total supply. And you can see really since about April, all right, we've been consuming less than we have in supply. All right, so the supply is basically outweighing demand. If you understand simple supply and demand, then you'll understand why this is relevant. Now, the rig counts is pretty important here as well. Generally speaking, all right, if you take a look at the amount of rigs and you're decreasing the amount of rigs, that's going to be a decrease in the potential supply. All right, so if you're decreasing supply and demand starts to rise, then that could be a potential bullish catalyst. And you can see the percentage change from last week for natural gas rigs is down negative 3.9%, and from last year it's down about 23.1%. So just kind of wanted to include that. Now, this is our bullish count for the natural gas futures. Okay. And we'll dive into this a little bit more when we actually hop on over to TradingView. But essentially, it would be an ABC correction. And then this triangle pattern we have right here is just a simple ABCDE, and we'd be looking for the breakout to the upside. Now, this is what the bears are going to say, that rather than an ABC correction, this was a 1, 2, 3 after hitting the 1.0 extension. And wave 5 is going to come down here and target the 1.236 extension. And that's going to bring you down to about $1.08 on the natural gas futures. And rather than this being a breakout to the upside, this is an ABCDE to the downside, right? So you do need to be a little bit cautious of that. So here we are on trading, taking a look at those. And you can see we basically have both scenarios here painted out. I kind of just gave you guys a brief summary, but we've got 3 waves here. And the big question is, what is this, right? Is this the start of a new bullish count to the upside where we look for a 1, 2, 3, 4, 5, or are we getting the 1, 2, 3, and then all of this is wave 4, and we're going to come down and get 5? So this is just something that I'm going to be monitoring, every week, and just seeing how it progresses, and just kind of use it as an overall guideline. But what I really like to do is I like to zoom out sometimes and take a look at the monthly chart and take a look at the monthly time frame here. Okay, and I'll show you guys what I like to look at. I want to look and pay attention to the overall, major supply and demand zones when it comes to natural gas, right? And you can see, we've got this very strong, clear demand zone here. And each time that we've come back down into it this year, we've had a strong reaction, right? And now, each time we've come into the overhead supply zone, we've had a very strong reaction from the sellers there as well, right? We keep pushing down each time we come into this zone. And, the month was starting off really bullish, right? August looked like it was going to be a really bullish month. We were making higher highs here on the monthly time frame, right? If we were to zoom in a little bit so you guys can see a little bit clearer. and we're starting to make these higher highs here, but now, it's reversing back down, and we're actually lower than where we started the month out at, right? So if we were to zoom down to like a 4-hour chart and really break this down a little bit more, we talked about this specific level here on the MCX futures for natural gas, which was 228.1. And, we mentioned that essentially we've continued to have a very strong resistance at that level. Okay. You can see all of the times on a 4-hour chart that we've come and touched this level. We mentioned that the more times you test the level, the weaker it's going to get. This is actually the daily time frame. I'm sorry, but yeah, so all these times, and we finally got the breakthrough, right? And this was a very nice trade. If you're trading Boyle or Cold, this was a very nice trade when we, finally did get the breakout, but we weren't able to really, flip our old resistance from support, right? You can see that daily candlestick close we have to the left there still ended up being a strong resistance, and we ended up opening there the next day and pulling back down. And it seems that we're getting symptoms of a look above and fail, right? And so that's essentially where we come out, we get the breakout, and rather than getting your textbook breakout retest push higher towards the top of the supply zone here, what we actually got was a look above and fail. And this is pretty significant because, it's also known as a false breakout. But the reason that that's so significant is because this point right here, this is literally the bull's chance, right? This is the opportunity for bulls to step in and say that, hey, we're in control of the price action. And what we're going to do is we're actually going to take advantage of this opportunity on the break and retest and push the price up higher and test the bears, right? And see how much higher we can push it up, potentially up towards the top of that supply zone. And they didn't do that. So, when I'm looking at the MCX futures right here, 203.7, you can see we formed a little bit of a double bottom there. All right. It's possible we could form a triple bottom here as we get closer to those levels and are trying to test those. But if we break through that level, then it's potentially going to be some more downside pain in the natural gas futures. And we could potentially even come back and try to retest this demand zone. I mentioned, you can see here and you can see here and you can also see here. As soon as we came and just even got close to touching this demand zone, you can see we're met with strong buyers, right? Strong demand, and price action immediately shoots up each time that we've come down to those levels. And we haven't retested it since the middle of April. So, it is a possible scenario we come down and test these levels. And there you can use the other charts too, such as Boyle, UNG, and different things like that to help give you some warning signs, right? We were trying to look for a retracement up to the $89 area. And we finally got a little bit of a breakout, right? So, we had a trend line here, right? We got a little bit of a breakout, but you can see here was also a little bit of a look above and fail, right? We weren't able to get any follow through and get a breakout, retest, and push up higher to this 89.15 area. Rather, we looked above and we failed and we started moving back lower. But I was trying to warn a lot of people of these two gaps, right? And if you're not familiar with what gaps are, I'll go ahead and let you know real quick. All I need you to do is smash the like button and subscribe if you've made it this far, and we'll go ahead and move forward. Okay, so you can see that there's these gaps, all right, on these days. And what these are is there's a gap between, the top wick of this candlestick and the bottom wick of this candlestick. All right, same thing here, the top wick of this candlestick and the bottom wick of this candlestick. And this is on the daily time frame. Now, these gaps, they tend to fill about 90% of the time historically. So, when we were up here and we were making this doji candlestick, all right, this indecision candlestick, I mentioned to people that, hey, you want to be a little bit cautious. We've got these gaps down. And I did actually try to go long right here, okay, right along this support level here, and see if we were going to be able to rally back upwards after filling this gap down here, and see if we could get a rally and try to get that other push back up to 89.15. But once we weren't able to do those, I went ahead and quickly cut those losses. You have to accept losses. You have to have some type of a game plan. And I knew that, if we broke below my level, that there was a very strong possibility we're going to come down and fill this gap. And you can see that that's exactly what we're doing now. So the big question is Boyle going to find any type of support here? Okay, or are we going to continue heading lower, right? That's really the big question. And if we were to just draw a couple trend lines here, okay, you can see that essentially we almost have what's known as a megaphone pattern. But we've basically got this broadening wedge right here. Okay, so we're going to see ultimately, do we get the breakout to the upside, or does this thing potentially break down to the downside? And to get a better and clearer picture of that, you want to be paying attention to that futures chart that we looked at. We went over the bullish and the bearish scenario, and that's going to help give you a guideline. Another thing you can look at is the natural gas spot price, right? So when you take a look at the spot price for natural gas, let me see here. Hold on, I clicked the wrong one. Go to the Henry Hub real quick. So we've got our natural gas spot prices here. And, again, we were looking and we were seeing, hey, we're potentially getting this breakout here, right? We had 279 as like a resistance area. We got a strong push up, right? And now we're kind of retesting this former trend line. So, if the spot price can try to find some support here, then that'll be a good sign. But one thing we mentioned, and, I don't want to sound too redundant with this look above and fail, but it's a strong concept and it's very simple concept. And you can combine this with divergences, and now you have a few strong concepts to really help you out along your journey. So you can see here that essentially price action was squeezing, all right, when it comes to our chart right here, right? So price action was squeezing with these two trend lines, and ultimately going sideways, right, after its strong move upwards. But what was our RSI doing? We can see here that the RSI was actually in a bearish channel. So this was a little bit of a bearish divergence, right? You can see here that we're making lower highs, but we're also making higher lows here. And so price action is squeezing, and the RSI had this bearish divergence, which, if you're not familiar with the bearish divergence, it's essentially just when the RSI, your relative strength index, is doing something different than the price of whatever it is that you're looking at. All right. And we mentioned that, hey, we could potentially break out past this trend line and see a push upwards if we were to get a breakout of our bearish divergence trend line, but we needed to bounce off of this trend line if on a pullback and move sideways, or either move up. And you can see here, we didn't do that, right? We actually fell right through, look above and fail, came back up and retested it. So this right here, our RSI, which is also known as a leading indicator, oftentimes it's going to tell you what's going to happen potentially in the future with the price action. That's why people use these divergences to see, what potentially could be happening in the future. And, the RSI already broke down and retested the major level and is pushing lower. Whereas here you can see it broke out and it's kind of retesting the area, and it's not that clear. So if we were to use the RSI as our leading indicator here, it's telling us that, potentially this is going to head lower as this heads back to the lower end of the range. We also like to look at KOLD, okay, and look at KOLD for any signals, and any type of indicators and patterns. And you can see KOLD still has its gap up to fill, right? So KOLD has not finished filling the gap up. KOLD is going to be your inverse natural gas, and you can see that there's still some room up here to fill. And if this gap is going to fill and continue heading upwards, that's going to result in things like UNG and Boyle going down. Now, ultimately, below $60.36, that is where we're really looking to stay below. If we can maintain below $60.36, then ultimately I'm going to be bearish on KOLD. But if we get back above that level, then it's a strong possibility we could get higher, right? Initially we had this bear pennant. Okay, you can see you have your flag here, and then you have the pennant. We got the breakdown, and what does this look like, right? This looks like a textbook look below and fail, right? So the opposite of that look above and fail. We're seeing that at this opportunity right here, bears, okay, KOLD bears have the full chance and full opportunity to get the breakdown, retest, and push lower, and really drive prices lower on KOLD. But rather, what it appears to be as of now, is the look above and fail, or look below and fail, and we're actually starting to trade back up in that range. So if we end up staying above our original bear pennant trend line right here, it's very possible that we come up and fill that gap, which is right there by that $60.36 area, above there, 66.48 and 72.60. Those are going to be some of your important price targets. Now, what about UNG, right? When you look at UNG also had some gaps down to fill. They weren't as powerful or as big as Boyle, but you can see here, right, when we talk about these gaps, there was a gap up to fill from March of 2023. And once we had this bullish cycle up here, you can see that's when we actually came and filled that gap. And that's exactly where we topped out at, right? We topped out there, then we had a gap down to fill right here. We also had another gap down to fill right here. And you can see we filled both of those gaps now. And UNG is approaching my support level here of 667. So look for 667. That's a potential triple bottom area. If we break below 667, 642, and 606 are going to be some of the support levels to the downside. And if we're able to hold above there, we have 715 as a major resistance level that we're going to need to be able to get above. So that's it for today's video. Hopefully you guys enjoyed it. If you did, smash that like button, subscribe to the channel. I do free newsletters every single week. All right, and there's trade ideas and just overall good investment intelligence in there. If you guys are investors or traders, I think that you're really going to enjoy that. And if you're a fan of free content, then you'll also enjoy that. So use that link in the description or the comment section down below. Sign up for that and get those emails straight to your inbox. Also, I do coaching sessions. All right, if you guys are ever interested and you want to do some one-on-one training, some one-on-one personal sessions or coaching or anything, feel free to email me ZachlyTrades@gmail.com and we can work on scheduling a session together.